I was asked a question on how we can analyze stocks and which would probably be the best stock to invest. So this is predominantly the most sought after question. There is no defined manner or method towards analyzing stocks. The market would probably define two kind of analysts, one who are fundamental analysts and the second who are technical analysts. Now what do fundamental analysts do? Fundamental analysts analyze the fundamental trend behind the stock, and those fundamentals are earnings growth, sales growth combined with profitability growth. There is an important factor called the PE ratio. You could probably check the historical PE ratio trends and also take a call based on the sales and profit growth. So the PE ratio is an important factor for most fundamental analysts. So if you have a stock which is growing at, whose profit is growing at 10% an annum, and if you have the same stock priced at 50 times profit earnings ratio, you could probably term the stock as expensive. Now there are exceptions to this. For example, if you look at most of the FMCG stocks today, Dabur, Godrej Consumer, Emami and so on, most of these stocks are priced at greater than 50 times PE ratio, and most of these stocks are not growing at even 20% an annum. They are probably growing at high single digits or somewhere in the range between 8 to 15%, and therefore you may tend to say that anywhere closer to 50 times profit earnings is way too expensive, but the market doesn't believe just on profit earnings. In a market like India, there is no dearth for demand, and therefore we would always be short of supply at some point or the other. And in such a market, the FMCG stocks are probably guaranteed to grow at the rate of 10% an annum, and that is why the market tends to price a higher PE ratio for such kind of stocks. And in a scenario where we are at close to 1 billion population, and the population is growing at the rate of about close to 5% an annum, I think this is an interesting situation to be in any consumer-driven market, and therefore one can term that such high valuations of FMCG stocks are probably justified. So it's not just the PE ratio which defines fundamental analysts. It also involves you to study the market trend, study the market sentiments, and then take a call in terms of which would be the right stock to invest. Now a lot of fundamental analysts probably are criticized because it takes that much longer for a stock to show the kind of returns expected by the analysts. For example, if you look at some stocks like let's say Hindustan Unilever, for a long period of time Hindustan Unilever didn't do anything much. So the boom which we saw from 1980 to 2000 was probably one of the best years for Hindustan Unilever, and finally it didn't do anything much post the 2008 crash. From 2008 to about 2013 it didn't do anything much, and there were a lot of other stocks which grew rapidly during that period. So while fundamental analysis does help, the con of fundamental analysis is that sometimes it does take that much longer for the stock to show returns. In terms of technical analysis is pretty interesting. you basically study the momentum of a particular stock through various factors. For example, one of the factors is the RSI of a stock, which we would call from an upper limit and lower limit perspective. If the RSI of a given stock has crossed 70, it means that it has crossed the overbought territory. Yeah, at the same time, if the RSI of a stock has dipped below 30, it means that it is in an oversold territory. Now, this is no guarantee of any stock to probably go up and down based on RSI, but this is certainly an indicator of a particular stock, what a particular stock is likely to behave in a given market situation. While a lot of these are technical jargons, most of my recommendations have some of these factors already studied in detail, and therefore the recommendation comes into picture. Not just the technical and fundamental trend, it's important for an analyst to weigh what the market thinks at the moment and take a judgmental call. Some of my calls in the past, especially the bearish call, which I continue to emphasize, is based on certain key trends which I'm seeing in the market. The FIIs have been net sellers in the market for 9th consecutive week now, and there is no change in direction as far as FIIs are concerned. Where we are seeing a change in direction is that the domestic institutional investors are continuing to invest. FIIs have been selling at anywhere close to 2,600 crores to 2,900 crores in any given week, and domestic institutional investors are buying somewhere close to 2,000 crores to 2,400 crores. So net you are seeing that the impact is getting nullified. Otherwise, we would have seen this market anywhere closer to 31,000 easily, right? So most of the stock calls are not from a fundamental or technical standpoint alone, but most of these stock calls are based on in-depth study of certain market trends, behaviors, and certain other factors which I just discussed a while back. It's hard for somebody to learn all of these tricks within a year's time, or probably within a few months' time. But I'll try my best to cover certain indicators which could be helpful in stock investing, right? But again, there is no short method which can probably tell you that by using this method you would generate a short return on any particular stock. So while some of these, it's always better that you take a knowledgeable call. The market is anyways risky to invest. There is a little bit amount of risk involved when you're investing in equities, but what is important is to take a calculated risk, and that comes by through knowledge and study of through some of these tools which I just discussed about. All the best. Happy investing. Thank you.